Let's break down how we made just over $2,600 on the FTMO challenge and 8% on my personal account. Let's get into it. So let's have this market's weekly breakdown. Now, on the monthly, again, we still have another 17 days before this candle closes, but what can we see so far? As we mentioned at the end of last week's video, we were going to have this retest of this, previous resistance level turned support level. We've had a rejection of that exact level. We've then had a really deep pullback. Again, this candle is not going to be set yet for at least another 14 days or so because we still got a long way to go. Let's go down to the weekly quickly though. So we can see on the weekly, we've come down to that level, retested it, almost like a break retest, and then we've had the retracement leg. There's retracement leg off it. Now, keep in mind, as I mentioned on the last week's analysis video, if this bullish candle for this last week was going to be a move back up to the upside to have all-time highs, this candle would have probably engulfed this candle, or it may have been a hammer candle, and then this week would have been a huge bullish engulfing candle. But we didn't. The weekly candle before that was a lot larger, and this candle here is less, or it still hasn't gone past the highs of the previous week. As I mentioned again in last week's video, once we are having bullish price action, you can see that the volume switch over, the bullish candles are much larger and they take over the previous bear candles. As you can see here, bullish engulfing candle, bullish engulfing candles. So you can see a lot of volume from them when we turn back around to go back to all-time highs, which this candle did not display, which we'll further see again, the lower the time frames we go down, that we can see that it's a retracement leg rather than an impulse leg back up to the upside. Now, just on the weekly still though, what can we expect? We can see that when we produced this week, as of Monday, 24th March, we had the retracement. Before we broke this support level, we had the retracement again, double wick where it could not maintain above that previous weekly base, this huge support. We then had the drop below. We haven't had a retest of any of these levels. This week we did have a retest of this level here, but we have not completed the retest of the supply level as we were bullish in that whole week before we broke below that level. So this is where I'm expecting price to get into. So let me just quickly highlight that level now. Get rid of this. So now we go down to the daily time frame. Oh, sorry, weekly time frame as well. Sorry. We also see the 50 EMAs dropping. So again, once we push back up into this supply level, we can see that there will also be added resistance of the supply level, the resistance level, the support level previously turned resistance level, and the 50 EMA. So again, more confluences for the bounce of this level and back down to the bear side, because I do expect price to still be bullish and take out these lows again, and then possibly continue back down to 33 levels, which would be further down. That's my end target, but step by step. So as mentioned, these are the levels I'm looking to get into for this retracement leg. So on the daily, what do we see? We had price came down on Monday, and then on Friday price came down. Monday ended as a doji. Tuesday we attempted to go further down. We held in this area where a support level formed. We then had a huge bullish engulfing candle on the Wednesday. Thursday, we couldn't follow through. We had a retracement because it was retesting this level here, which will go down to on the 4 hour. And then we've had a push off that level. Now we continue back up to the upside. Again, targets are this green zone here, which is also on the daily, a supply level, also a resistance level, support turn resistance level, also the 50 EMA. So I'm waiting for price to get to retest in those levels right there. If we go down to the 4 hour, we can also see we had this leg down. We've then had the double bottom. We've then had the break above this resistance level. We've then had the retest. We've followed by the volume switch. So bear candles, waiting for bull candles to be larger and have more volume. We had the bear candle down, a long rejection. We could not maintain back below this support level. Bulls came in. Sellers tried to test it again. We could not even break below that level, let alone trying just to test it. We then had a bullish engulfing. Then two bear candles tried to see if they could maintain below. Nope, bulls came back in again. So of course now I'm expecting a push back up to these levels into this is, if I give you a number, I'd say 42s. So I'm expecting price to reach the 42 level this week, sometime this week. Now, if we go down to the 1 hour, we can see that a bit more clearly. We had the leg down, retraced into this little level. Remember, as this leg came down, we didn't form any strong structures. So these were the first structures formed during the week. Okay, we had price form a little consolidation here, drop below, retested with this wick in New York, dropped back below, came back and retested it, created the resistance, dropped back down, created the double bottom, and then push back up to break it and retest it. This is what we mentioned last week, that sometimes you have to sit on your hands and wait for more data because we were here. So we need to know, oh, sorry, we were here on Monday. So we need to know what's happening in the market before we can start placing trades. And then we broke above it, retested now, and now we're headed back up to the upside. So as you can see in normal bearish momentum, we had the drop, break, retest, and we're still inside this whole level. So of course we're still bearish. So this is the level I'm expecting it to get back to, which is the resistance and supply level. Have some consolidation here, some liquidity sweeping, and then we can obviously have the drop back down. So this is the setup that we're in right now. We're just waiting for it to complete. If there's an opportunity, I may take some buy trades, again, back up to these levels. If there's an opportunity, if there's a good trade that presents itself to me. If not, we'll just be waiting for the consolidation in this area, and then we can take that drop all the way back down again. If we quickly go through the trades of this week, of how we made the $2,600 on the FTMO, I will go over the whole FTMO account later on, but I want to just take you through my weekly trades. I'm going to go through my weekly trades from now on as well, just to show you exactly what trades I'm taking and just to illustrate what I saw. So we had this drop down the rest of Monday. Then we had a lower time frame double bottom here, as you can see. We then had price turnaround off this support level. Once I saw the price turn around, I tried to get a small trade in because I knew that the likelihood is that because we've done the retest of this monthly level, I knew there would be some consolidation or some rejections in this area. So when I saw this double bottom form of this monthly retest level, I took a small buy in two positions up to this little support level, this little resistance level. So as you can see, I bought where the shade starts from the gray and the green section is the profit target. So of course, we took those two positions, as you can see on the MT5 screenshot there. Those are the first two positions. Then the next position was a loss of $206 because what did I see? I saw this level form. I had this bullish engulfing, this bullish high volume candle come in, and I saw this minor retest of this black candle, the bear candle. I then took a buy position, stops below supports, and to be honest, this was a premature trade. Two premature trades I took was this trade and this trade because I should have waited for the break and retest. I was just trying to get in early because, as you can imagine, the markets are moving crazy erratically recently, so this could have just shot all the way up. So anyway, as I saw this bearish engulfing candle come back in, again, price could have just turned back around, but it didn't. I saw this doji form, and as it was going back up, I closed it. So I didn't make a full loss of 1%. It was 0.2%, as you can see, $206. Then we had this position, which is one position scaled in with another smaller position, which was the 1,100, 244 and the $96, which were here. Of course, I've seen the bearish engulfing rejection of this resistance level formed. So again, I saw that there's a high possibility, as we're of course strong bearish, that we're probably going to take out these lows. Okay, so I took that down. I didn't wait for a retest because the volume was so high. Wrote it down to the wicks. The reason why I came out in the wicks here and not held until all the way to, because this was my regional take profit level, which was to the pip and then turn around, was because I saw these rejections and it was 2 a.m. my time, East Africa time, and I just cancelled the trades. I was bored, I was on the screen, I couldn't sleep, and I just cancelled the trades just because I saw a few wicks, but I should have just held anyway. This is why you should only be trading in your time frames and only exit the trades or manage the trades to certain rules. Don't just get out of positions. So yeah, I could have made another 0.5% if I held it. But hey, you win some, you lose some, right? And the next trade was this one here because I saw again the bottom and the rejection. So of course there was this level that was forming, which is this one here that I'd seen because it's the one I traded up to there, broke up, retested, bounced off, wick rejections, rejected, back down to bottoms, rejected again. So again, I took that sell, expecting price to hit these lows. It took me out though at a full, just under a full hour. So I lost $862 on that one. But as I saw that happening, I saw it take me out, and then we rose back above that support. And of course, above that support, the next level is this level here. And this was very high volume. in New York session. So as the price closed straight above here, I took a buy position and I took just under 1R because I targeted these highs. So that was the position for the $704. So these two trades pretty much kind of cancel themselves out. The next one, I then took this buy here, which was another premature buy because I did not get the correct rejection candle. But again, I was trying to get it early because of the markets moving erratically like this, as you can see. So I took a loss there for a full R, which is the $1,001. Then I took a minor small position here, which I didn't bother putting on here because it was only $136 because I entered it near close of day. It rejected, created a wick, and then I closed it just there right before close instead of sitting it through the weekend. And those are the trade breakdowns. But this is a terrible time to be trading anyway because when the market's ranging, sometimes on retracements, you get a lot of mess, as you can see. So you've got to be really patient. I do prefer trading these. These drops much better. Going on, what am I looking for? Price to come back up here to retest these highs. I'm waiting for some sort of retracement so I can get back in and take them up. If not, I'll wait for the rejection or accumulation here, liquidity sweeps, and then drop back down. Again, I'm expecting these lows to be taken out. So let's see how next week and the week after that goes. Catch you soon, guys. Make sure you subscribe. Also, I've got a link below on my Calendly for a one-on-one 30-minute session if you want to go over the nuances of US30 and how it moves.